Assalamu alaikum wa rahmatullahi wa barakatuhu. Students, today inshallah we will move on to the next chapter, that is chapter number 4, recording of transaction part 2. Okay, in your previous chapter you have learned that all the business transactions are first recorded in the journal and then they are posted in the ledger accounts. Okay, a small business may be able to record all its transaction in one book only. Okay, that is the journal. But as and when the business expands and the number of transactions becomes large, it may become cumbersome to journalize each transaction. So for quick, efficient and accurate recording of business transaction, journal is subdivided into special journals. Okay, so many of the business transactions are repetitive in nature. Okay, they are repeated in nature, so they can be easily recorded in special journals. Okay, so each meant for recording all the transaction of similar nature. See, for example, all cash transaction may be recorded in one book, all credit sales transaction in another book, and all credit purchase transaction in yet another book, and so on. Okay, so these special journals are also called day books or subsidiary books. Okay, so the transaction that cannot be recorded in any special journal are recorded in journal called the journal proper. Okay, so the special journals prove economical and make division of labor possible in accounting work. So in this chapter we will discuss the following we will discuss the special books. Okay, now what are the special books? There are altogether 6 books, that is the cash book, purchase written or written outward. Okay, so this purchase written is also called as written outward book. Okay, then sales book, then sales written book, that is the written inward book. Okay, and journal proper. Okay, so what are the 6 books I've told you? Cash book, purchase written book, that is also called as written outward book, and sales written, then sales written book, sales book, sales written book, and journal proper. Okay, so altogether there are 5 books. Okay, this is there in your textbook, page number 4. Okay, now first we will see what is cash book. Okay, so cash book is the book in which all transactions related to cash receipt and cash payment are recorded. Okay, so what is cash book? It is a book in which all transactions related to cash receipt and cash payments are recorded. Okay, so it starts with the cash or bank balance at the beginning of the period. Okay, generally it is made on monthly basis, and this is a very popular book and it is maintained by all the organization, whether the organization is big or small, profit or non-profit. Okay, so this book serves the purpose of both journal as well as ledger. Okay, so it is also called as book of original entry. Okay, this cash book is also called as book of original entry. Okay, so when a cash book is maintained, transaction of cash are not recorded in the journal. Okay, so if the cash book is maintained, cash transaction or the transaction of cash are not recorded in journal, and no separate accounts for cash or bank is required in ledger. Okay, so no separate account for cash or bank is required in ledger. Okay, so in cash book also you have of 2 types. First is single column cash book. Okay, single column cash book. So what is the single column cash book? See, the single column cash book records all the cash transaction of the business in a chronological order, that is in a complete record or cash receipt and cash payment. So it is a complete record of cash receipt and cash payment. So when all the receipt and payment are made in cash by a business organization only, the cash book contains only the amount column on each, that is the debit and credit side. Okay, so the format of single column cash book is this one. Okay, you can see here. See the format. See, you have 2 sides, debit and credit side. Debit side you have date, receipt, LF, that is ledger folio, amount. Next, on the credit side, you have date, payment, ledger folio, and amount. Okay, so this is the format. It is very simple. It is same like ledger, but instead of writing here particulars, on the debit side you have written receipt, and on the credit side you have written payment. That's all. Okay, so the posting is done same like ledger. Okay, it is done same like ledger. You don't have any difference here, but here only the cash transaction are recorded. That's it. Okay, so there is one sum in your textbook, page number 100. Okay, this is the question there. Okay, I'll just, as you all know how to post now, I will just show it. I will just explain directly okay, in this video. Okay, as you all know how to post in your ledger, same way you have to post in your cash book. So now here it is told, okay, you just have to consider the following transaction of MS Rupa trader. Observe how they are recorded in a single column cash book. See here, date is given and details is given and amount is given. So what is the first transaction? 2017 November 1st, cash in hand 30,000. That means they already have cash in hand. So this cash in hand which is already there in the beginning of the month is called as balance drawdown. Okay, so if there is any cash in hand, that has to be entered on the debit side as balance drawdown. Okay, it has to be entered on the cash book on the debit side as balance brought down. Okay, this is the opening cash in hand. Okay, so just see here you can see date is given on the debit side, first transaction, balance brought down 30,000. Okay, see the second transaction, November 4, cash received from Gurumeet. Okay, so when cash is received from Gurumeet, what is the journal entry? When you receive cash, asset is increasing, so cash is increasing, and Gurumeet was your debtor. Now that debtor was also an asset, but now that debtor is decreasing, correct? So one asset is increasing and the other asset is decreasing. So when the asset is increasing, that asset should be debited, and the asset which is decreasing, that has to be credited. So your journal entry will be cash account debited to Gurumeet's account. So cash account is debited, so debit side of your cash book you have to write Gurumeet account. Okay, see here, November 4, on debit side you have written Gurumeet 12,000, correct? Okay, next we will see the next transaction, that is November 8th, insurance paid. Okay, annual installment, that is 6,000, insurance paid. So when you pay insurance, it's an expenses, so expenses should be debited. So insurance account debited to cash account. Why is cash credited? Because your cash, the asset what you had is decreasing, so when it is decreased, it has to be credited, and insurance is an expenses, so whenever you incur expense, that expenses has to be debited, correct? So your journal entry is insurance account debited to cash account. So your cash account is credited, so credit side of your cash book you have to write insurance. The amount is 6,000, correct? The amount is 6,000. Okay, next is November 13, purchased furniture. So when you purchase furniture, what is the journal entry? Furniture is an asset, that asset is increasing, so furniture account should be debited, cash account should be credited, because when you purchase furniture you have to pay cash, so cash is decreasing, so your journal entry is furniture account debited to cash account. So your cash account is credited, so on the credit side of your cash account you have to write furniture. Amount is 13,800. Okay, amount is 13,800. Okay, I hope you can see here. Okay, next is sold goods for cash. November 16, sold goods for cash, amount is 28,000. So whenever you sell goods, the sales account is always credited, correct? So you know, when you sell goods, obviously you get cash. So cash account is debited, sales account is credited. Okay. So cash account debited to sales account. So cash account is debited. So on the debit side of your cash account, you have to write sales 28,000. Okay. So I think you all can see sales 28,000 here. Correct. Okay. Okay, now, okay, next, purchased goods from Mudit in cash 17,400. Date is November 17. So you purchased goods from Mudit in cash. So you paid cash and you you purchased goods. So whenever you purchase goods, obviously purchase account is debited, and if you're paying cash and if you're purchasing, then your journal entry will be purchase account debited to cash account. Okay, so purchase cash account is credited. So on the credit side of your cash account, you have to write purchase account. Correct. See here. Okay. Okay, you can see. Okay, purchase account 17,400. Okay, and then purchased stationery. Okay, so purchased stationery, what is your journal entry? Stationery is an asset. That asset is increasing and cash account is decreasing. Correct. So stationery is account debited to cash account. So your cash account is credited. So on the credit side of your cash book, you have to write stationery account. You have to enter stationery account. Okay, you can see here stationery. Okay. Okay, next. Okay, cash paid to Rukmani in full settlement of account 12,500. Okay, you paid cash to Rukmini in full settlement of account. So Rukmini was your creditor. Okay, you paid cash to a creditor. Okay, so now your creditor is decreasing. So when your creditor is decreasing, that account should be debited. Correct. When your creditor is decreasing, that account should be debited. And when you pay cash, obviously your cash is coming down. Your journal entry is Rukmini's account debited to cash account. When cash is going out, it has to be credited. So journal entry will be Rukmini's account debited to cash account. So cash account is credited. So credit side of your cash book, Rukmini's account has to be entered. Okay. See here, Rukmini's account 12,500. Okay, so this is how it is done. Okay, I have not completed this sum. You have 4 more transactions. I want you all to complete this. Okay, and as usual, like in your journal entry, how do you close? You total both this side, write the greater balance on both this side, take the difference, and where the total is less, where the amount is less, there you have to write balance carry down. Okay, and where the amount is more, you have to write balance brought down. Same like ledger. Okay, I want you all to complete this sum. I hope you all understood, and if you have any doubt, please do contact me. Okay, this was the single column cash book. This was the single column cash book. In our next class, we will see how to do the double column cash book. Okay, Jazakallah khairan.